Welcome back, friends and longtime supporters of the Schaefer Stock Market Podcast. Thank you again for joining us here today. I am Josh Selway, an editor at Schaefer's Investment Research. We do these podcasts once a week, so tune in every single week for quick updates on what we're covering over at schaefersresearch.com and some other things that I am looking at throughout the week. This week, we're going to touch on options trading. That is what we know over at Schaefer's Research. So I'm going to touch on some of the stocks that saw notable options trading from the past week, and just a few options trading basics as well. Use this as an opportunity to give some people who aren't familiar with options trading. I talk to a lot of people a lot of time who know a lot about investing and the stock market, but yet really don't understand options trading or know what it is when I say that we cover options trading here. So just going to use this opportunity, give a quick breakdown of options trading, a few basics there, and use that to sort of talk about some of the other stocks that we've been covering this week. But first, I have to mention some of the things happening in the broader market here. Of course, two big things from this week. We did get a rate cut from the Fed, as many were expecting, though Fed Chair Jerome Powell said that this is not the start of a easing cycle, but instead a mid-cycle adjustment. So he says, stocks actually struggled after his press conference, as traders were hoping for more easing going forward, which would be good for equities. And then we also just had an so-called unexpected bombshell on Thursday, where President Donald Trump said that more tariffs will be going on imports from China. And I say so-called unexpected because I was kind of surprised to see so many, you read through a lot of these articles, they talk to analysts and investors, and people were acting surprised by this. And this is just more of what we've seen this year around this trade drama with China, is that President Trump likes to surprise and come out of nowhere with these types of announcements. So to me, it wasn't surprising at all. I've kind of been waiting the next bombshell like this. We got it. New $300 billion in tariffs is the threat that's coming out here. The U.S. and China continue their trade talks, so stocks sold off on that news as well. So a few sharp losing sessions this week for the major indexes, just based on these trade fears, and that also sparked, of course, sharp losses in Europe and Asia as well. But that's all I wanted to say about those broad market themes for this podcast. We're going to jump right into options trading, and I need to preface this by saying that over on schaefersresearch.com, we have an extensive education section with all types of things that can help you if you're getting started with options trading, or if you want to get back to the basics. We have getting started with options, what are stock options, advantages of stock options, different ways you can use options, and lots of key concepts to know if you're going to be trading options. So just a few of the basics here for those who aren't familiar. With options, you have call options and put options. And a call option, when you're buying a call option, essentially you're betting on the stock going higher. So it's a short-term contract that you use that has underlying 100 shares of a certain security. So let's say we're talking about Apple here. One options contract is equal to 100 shares of Apple. So you get that exposure. And then if it's a call option, let's say it's the Apple 200 call, the further Apple moves atop $200, the more money you're going to make on your options trade. If it is a put option, so a put option is the opposite. So let's say you buy the Apple 200 put. Apple goes below $200, and your options contract starts making money for you there. So there's a lot more to it than that, of course. When you're buying options, you have to pay premiums, which is basically set by the volatility expectations around a stock. So if you have a stock that makes sharp moves. Think one of the most popular tickers is Advanced Micro Devices, ticker AMD, the semiconductor stock. That is a very popular name from options traders because it makes big moves in both directions. So for stocks like that, if a big move is expected, premiums, what you have to pay to buy the option, will be higher. So this, you can't just say a stock's going to make a big move, so easy peasy, I'm going to buy, call or a put on either direction, and you have to pay up. And so the move that you are foreseeing has to be even greater than what the options market is pricing in. And going off that, options give you more flexibility as well, and that is why they're a favorite way to hedge from a lot of investors. Let's say you are an Apple shareholder and you love the company long term. You want to be a long-term shareholder, but you're worried about iPhone sales next quarter or whatever it may be, just the stock. Maybe you're worried about broad market headwinds. Maybe you're worried about China, the trade dispute with China weighing on Apple stock. So you may pick up an Apple put option, maybe a long-term put option. Sometimes you can buy what's called leaps, which are long-term options, and you can buy that maybe an out-of-the-money put, which is a put option that has a strike deep below where Apple is trading now. So then if Apple shares pull back dramatically, you can make money off that put option without selling your Apple shares as well. So then you can make a profit, and that really limits your losses on an absolute basis. And that's one of the favorite uses of options trading, is a way to hedge your portfolio. But you could also speculate straight up and use options as a way to make money fast in the stock market. So I wanted to bring up a few examples of options trading that we looked at this week over at schaefersresearch.com to show how this stuff plays out in real life. I'm going to start with this stock, Viking Therapeutics, ticker VKTX, which reported earnings this week as a biotech stock. And what we covered for Viking is that there was an increase in call trading earlier this week ahead of earnings. So earnings obviously bring out big moves in stocks. So it's a favorite time for options traders to make moves. But as I alluded to earlier, when a big move is imminent, or a lot of people are expecting that drives up those premiums. So you need an even bigger move to come out profitable with an options trade. But for Viking Therapeutics, we noted that there was an increase in call trading. At the time of our writing, it was 21 times was typically seen at that point in the session. So that's what we look for: unusual options trading, unusual volume, and that's what we were seeing for Viking. And traders were targeting the November and 11 calls. So just on the surface, this would suggest that traders were expecting the stock to rise around earnings. They were betting on a positive earnings surprise. We actually noted that this could have been the result of spread activity, a spread trade. That's a more complex options strategy. Again, you can use options in a number of different ways. I say more complex. A spread is actually one of the more basic strategies you can use with options, but there's actually a lot more. You could talk about iron condor, all types of different strategies with options. But for now, I'm going to keep it kind of simple and just point out that this increase in call buying around Viking, we noted that. And this is something we tend to do every week around earnings for certain names. Look at how options traders are situated, because options trading can influence the price of a stock. So for Viking, unfortunately, it looks like the shares have kept moving lower this week. So earnings did not bring a big move. The stock was last seen trading around $7.50 per share, which was below where it was trading earlier in the week when we wrote about it. So it's likely that if these were option bulls betting on an upside move, that they are disappointed so far in their bets. But of course, these were options from the November series. Every month has their series of options. Then we have weekly options underneath that. But these were November calls, so maybe these are long-term option bulls, giving themselves more time to turn a profit with their bets. Another name that saw increased call trading before earnings is CVS Health. CVS is scheduled to report earnings next Wednesday, August 7th, and it also saw increased call trading and put trading just this week, which actually had intraday volume doubling the normal pace. And these CVS traders were targeting weekly options. Weekly options give you even more flexibility. And in this case, it's a good example because these traders were targeting the weekly August 9 series. So obviously they were going right after the company's earnings release and making bets based on what they believe will happen in the earnings release. And based on this activity that we saw here, it was more spread activity well into the seven-figure range here. It was almost a $3 million trade here that we listed over on schaefersresearch.com. We wrote all about it if you want to check out the article. But this essentially was a bullish position here, betting on CVS stock to rise after earnings because these options are set to expire by the close on Friday, August 9th. So outside of earnings, let's go to a different type of example here. Capital One this week, ticker COF. Capital One was put into the news because of the data hack that came out of the company affecting 100 million customers or whatever it was. So when news like this hits, it's often met with options trading. Of course, this time it was bearish options trading as traders were starting to bet on more downside for Capital One, and which we noted in our write-up on the company earlier this week. A lot of times momentum traders for stuff like this will target weekly options. In this case, they were targeting weekly puts. But there was also put buying, it looked like, in the September series as well. But what happens when news like this hits, a lot of times you'll see short-term options trading as traders try to bet that the momentum, whichever direction this time to the downside, will continue. And that's what we saw here for Capital One. And another article over at schaefersresearch.com that I would recommend checking out from this past week is this write-up on IBM titled Calls Pop After Rare IBM Bull Note. IBM was upgraded at Morgan Stanley to overweight, and that resulted into a major uptick in call activity. And why I would recommend this article in particular is that it suggests that these calls were not bought to open, but they were sold. So when someone sells a call, most of the time that is them betting that the stock will not rise above that certain price point, wherever the strike is, by whenever the options expire. So that's a different type of strategy. If you want to learn about that, again, check out our education section. It goes into great detail about all the different options trading strategies that traders can use, and just keep up to date on our daily blog over at schaefersresearch.com. Obviously, write about options every single day. Go into the detail about the options trades that we're monitoring. We look for the big options trades and the major uptick in volume. Any names that are seeing that, we try to highlight over on the website. And for those who are familiar enough, confident enough in their options trading ability and want to use this as part of their investing strategy, or if you're just looking to speculate some, we have a number of different options trading services that you can read about on our website. A number of different people at Schaefer's Investment Research you can talk to if you want to contact us and learn about those. Our flagship product is the Option Advisor, our newsletter that comes out once a month. But we also have tons of weekly products. We have weekend trader products. And actually, we just wrote over on the site, as I said last week, we tend to do these trade postmortems where we go through our trade and how it unfolded. And one trade from our weekend trader series service just doubled traders' money. It was for Hasbro, ticker HAS. We were trading the October 100 call, and as I said, traders were able to double their money with that recommendation. So definitely check out these trading services if you're interested in options trading. Outside of that, I just wanted to call attention to more seasonal studies. As I often say, we love looking at seasonal data because it can really reflect how stocks could do in certain time periods. A lot of this stuff has to do with business trends. Certain companies do better at certain times of the year. Stocks historically outperform at similar times during the year. So we tend to look at quarterly historical data, and we have a lot of stuff up right now on just data around August and which stocks tend to perform well in August, and which stocks you might want to avoid in August or lower your exposure to, or maybe use options trading to get into the action one way or another. I will say one name we just looked at that could see seasonal headwinds is Exxon. That stock has only finished August in positive territory twice in the past 10 years. So some red flags there around Exxon. We have a bunch of different names. We actually listed 25 different stocks in our worst S&P stocks for August table. You can check that out over on the site. All that data comes courtesy of Schaefer's senior quantitative analyst, Rocky White, one of the best in the business. We love Rocky. He's always given us some of the best data to use on the site, which is free for you to check out right now over at schaefersresearch.com. But I'm going to leave it right there for this week. Thank you so much for everyone who's been listening. Subscribe, review wherever you are listening. Check out Schaefer's on Twitter, Facebook, StockTwits, Instagram. If you want to check me out, I am Soe151 on Twitter. But again, thank you so much to everyone who's been listening. I will be back next week with more stock market news. See you soon.